Robert Fagan joins me now. He's a healthcare analyst of equity research at GMP Securities Limited. Robert, welcome.
Thank you.
Robert, you're focused primarily on U.S. cannabis names, I've noticed, and so tell me first of all, what's GMP's sort of long-term outlook in the cannabis space generally? Why are you so attracted to the U.S. over Canada?
Yeah, I mean, the Canadian industry has obviously had a longer kind of growth cycle and development than we've seen in the U.S. It's more, I think, more at the infancy stage for the U.S. market, and like we saw in Canadian companies more near the outset, there was tremendous growth opportunity, and I think that, with the size of the potential U.S. cannabis market being, arguably 10 times larger than the Canadian one, then you're going to have an opportunity to capitalize on that, extended runway for growth, especially if, eventually federal legalization happens. And,
sure.
I think, especially with the recent downturn, you might have some interesting entry points for some of these U.S. cannabis names.
You bet. So what is the institutional bet on when federal deprohibition is likely to occur?
Look, I would have to say that maybe going back about 9 to 12 months ago, there was, I think, some that expected this could happen very quickly, maybe inside 2-3 years. I think it may take longer than that, given some of the extended time frame we've seen for some more recent federal reform to pass through the legislative process. So, I don't have a crystal ball, but I would think it may be a little longer than 2 or 3 years.
The Safe Banking Act, if it passes, that's going to be a major step forward, I guess.
Yeah, absolutely. I think it's like a very significant, reform that is being considered the federal level in the sense that, it can certainly open up, I think, bank debt opportunities for these U.S. Operators and perhaps lower the cost of capital. And, there's speculation abounds, but, perhaps it could unlock some other institutional capital to flow into the sector, which is certainly something that would be beneficial.
Yeah, you bet. Okay, so specific names, you've got some favorites, obviously, that you're covering. Why don't you tell me about some of those?
Sure. One of my favorite operators is Green Thumb Industries. This company is just, I think, a standout performer when it comes to compliance with with state level regulations, and of course it's demonstrated very good operational efficiencies thus far. It's generated probably the highest EBITDA level in its last quarter amongst its kind of multi-state operator peers. The company has a good balance sheet. It has about $90 million of capital free to deploy. And, I think its upcoming results for Q3 should be quite strong, demonstrating, again, its strong operational execution, and I think it's a go-to name as a result. Cool.
And what about Trulieve Cannabis? I mean, I share that one as one of my favorites, too.
Yeah, I mean, Trulieve is definitely another strong operator. It's demonstrated a dominance in the Florida market, of course, and maintained a very strong market share, in my view, even despite a big level of competition coming up around it. I think in the last year it's maintained roughly a 50% share of the market, where competitors opened in excess of 100 stores compared to their 37, I think. So obviously they've dialed in their operations. Their supply chain works really well. And I think it's another company that could do very well with upcoming Q3 results.
We've seen some projections from some of the bigger names, Green Thumb Industries, some analyst estimates, and you were saying that you believe that they're in a position to exceed some of those estimates?
Yeah, I think that my own estimates for the upcoming Q3 results would basically portray that. I have actually right now an estimate of around $13 million in EBITDA for the Q3 quarter, which compares to the current consensus of about $7.5 million. So it's quite already a higher view than the rest of the street, and I think that could be achievable just on the basis of some of the dynamics of their recent acquisition being included in their results for a full quarter this upcoming Q. They did an acquisition of a company named Essence in Nevada, which historically had some very strong revenues around 70 to 75 million run rate and at a 35% EBITDA margin. So, if we kind of dig into that a little bit, for this next quarter, they should have a full contribution, which I think could generate somewhere in the area of 20 million of sales, and at a 35% EBITDA margin would be roughly 7 million of EBITDA contribution from just that acquisition. My overall revenue forecast for Q3 is about 64 million. So if I take out that 20 million coming from Essence, it leaves about 44 million in kind of standalone Green Thumb Industry platform sales. Now, in the previous quarter, that kind of portion of their business generated, I estimate, around a 10% EBITDA margin. So all the company would need to do is to get that portion of their business to go to about 13% EBITDA margin in order to bring in that extra EBITDA to get to my $13 million estimate for the quarter. So I think that's very achievable, especially because Green Thumb is going to have in this Q3 a full contribution from their Massachusetts recreational operations, which are good margin business, and they also have a platform in Florida which is vertically integrated and obviously carries higher margins as a result. So I think that my number is attainable, and if it does get to that level, that would be probably about a 60% upside to the current consensus view.
And what about TrueLeaf?
TrueLeaf is another one where I think the Q3 numbers could be very impressive. I actually went out and raised my forecast for that quarter about a month and a half ago, just because the data that we get from the Florida Department of Health is really pointing to really strong results. So we get weekly data from the Department of Health there, and what we've seen during this Q3 period is very strong extract product sales and as well smokable flower product sales, which were recently made permissible by the regulators in that state. So if I kind of break down those volume numbers aggregate those volume numbers that the Department of Health provides, and I take some selling price assumptions, I think that the company could generate up to $80 million in revenue for the Q3 quarter. And that compares to my current number or revenue estimate of 75 million, and the rest of the analysts which cover the stock, which are at a roughly $65 million revenue number. So putting it together, you could have almost 20-25% upside on the consensus view.
Harvest Health Recreation was on track to become the biggest operator among the MSOs, assuming they can close the 3 transactions currently under scrutiny by the Department of Justice. But they've also got some questions around whether the debt financing that they had arranged is going to close, and there's really been no information on that from the company.
Yeah, the debt financing delay, I think, has impacted the stock, obviously. I think that the company does have other sources of capital that it can draw on, especially it having announced an availability under a convertible debt structure for up to $500 million. They've drawn about $100 million of that. So there is the ability to, I think, further leverage that facility. And there's other sources of capital I think that they could draw from in potentially doing a sale leaseback transactions for some of their assets. But certainly, the delay in that last financing structure, which was not convertible but more of a straight debt with some warrants attached, and the delay around that has impacted perhaps some people's expectations for when they could see more capital infusion into the company. That said, they did have about $100 million in cash on the balance sheet as of the last quarter. And with some of the pending transactions, I think that that could use up some of that capital, but not put them in such a precarious position as may be reflected in the stock price. So,
sure.
I think there could be some opportunity for a nice rebound in that company should they have more clarity around the financing situation.
Yeah, so that's the opportunity that kind of excites me about Harvest Health, is that if the DOJ is going to be a nothing burger, as some people like to say, and the financing is going to get done some which way, and they're in good shape, well, then this has been oversold to like a high degree.
Yeah, I mean, you can see it in the valuation metrics. Based on our numbers, the stock kind of trades around a 4 to 5 times 2020 EBITDA multiple.
Yeah.
Which compares to probably around 8 to 10 times for some of its comparably sized peers. So certainly, it's got perhaps more torque potentially on the upside than some of the other names. Should we get that increased visibility?
Yeah, you bet. Okay, and then you do have a couple of Canadian names here. I see Hexo, and Hexo's, something that I'm focused on a bit because they've come out and sort of drawn first blood in the price war by launching this this low price weed that sort of comes at the black market head on.
Yeah.
Do you see I know you focus on U.S. mostly, but do you see that the competition between black market and licensed markets is going to continue to be a challenge for all of the licensed producers, both in the U.S. and Canada?
Yes, I mean that's the main driver of the kind of secular growth in the cannabis industry is the ability to capture market share from the black market, obviously, and in Canada that's been a little bit hampered, obviously, by the rollout of some of the physical store networks. Although I would think that it's not doing as terribly as some people may suggest recently. I mean, if we look at the sell-in volumes from Health Canada recently, and you annualize that, it may suggest somewhere in the area of 120 tons of sell-through into the legal channel. Mm-hmm. And if we look at some of the PBO estimates that can initially size the Canadian market at maybe 650 tons, you might be able to calculate that about 20% or so of the black market has been transferred to the legal market in Canada. That would be, I think, a little bit behind some of the original states that legalize in the U.S., where, for example, states like Colorado and others that were early ended up transferring, I think, about 70% of the market share from black market to legal market over the first 3 years or so of their programs. So it's not, let's say, as rapid perhaps in the Canadian market than we've seen in the U.S., but not terrible. And I think that the U.S. market will continue to have more states legalizing recreational sales and ultimately capturing more of that black market opportunity.
Right. So you think the incremental acquisition of black market market share, boy, that's a good one, is going to continue for the licensed producers, in favor of the licensed producers, more so than going the other way?
Oh yeah, I think it's like you had mentioned, Hexo getting their pricing down on large volume purchases to roughly $4.50 a gram. I mean, I would say that's actually lower than some black market prices that are observable in Canada. So if the pricing is a contributing factor, then absolutely that's going to help with an acceleration of market share transfer. I think there's pricing considerations in the U.S. as well that factor into that, but I would think it's less of a consideration maybe than in Canada, just because I think historically U.S. cannabis prices in the black market have been higher than in Canada, and the risk factor has been so kind of pronounced for consumers in the black market in the U.S. that that's kind of a factor which drives increased adoption in the legal market on the state side. It's just so much safer and so much less of a I guess a risky situation to be able to get into the legal channel there.
Okay, great. Robert, we'll leave it there for now. Thank you very much for joining us. We'll come back to you soon, and we'll see you soon.